Hello guys, welcome back to the channel with Magic Games. Today I want to talk about options, how to buy a contract and then sell it, how options work, and how is it different from the usual buying or selling stocks. So guys, before we get started, don't forget to hit the like and subscribe button. Turn on your notification for future videos. So in my last video, I talked about what stocks to buy if you're just getting started in the stock market and how to build a strong portfolio. If you have not, please go ahead and check out these videos. Before we start, trading options can be very risky. You can lose most or all your money at a very fast pace. So please trade responsibly. So to get started, what is an option? An option gives you the right to buy or sell 100 shares or one contract of an underlying stock at a specific strike price on a specific date. Let's go ahead and show you how to actually buy the options. So you go ahead and click on trade options if you are on a computer. But if you are on your phone, you will automatically see trade options for that stock and then you will go from there. So this is the window you get when you trying to buy options. Okay, again guys, in an option window you have three sections. First, you have in the money section below the actual stock price, and then at the money, which is the actual stock price, and then thirdly you have out of the money, which is anything above the stock price. So in the money options, in my opinion, I think they are less risky than out of the money options. Out of the money options, they are cheaper. You can buy more contracts with a small amount of money than in the money. However, they are very risky. So please, as I said guys, trade responsibly and know where you're putting your money. So what is a strike price? So a strike price is the price at which an underlying stock can be bought or sold. So this is what you call a strike price. For example, let's say you want to buy the $17 call of GameStop for December 11, 2020. So 17 is the strike price. So this is the direction you want the stock price to move between the first date and the expiration date. So if the stock price goes toward that $17, you will actually make a profit. How much do you have to pay to buy an option? Each option has a strike price and you pay according to the strike price you want to buy. For example, again, you want to buy the $17 strike price, you will pay $2.09, and if you want to buy the 18, you will pay $1.72. Again, another one, if you want to buy the $16 call, you will have to pay $2.54. So whatever the price is for an option, you multiply that number by 100 because you are having the right to buy 100 shares, which is equivalent to one contract. So every time you buy one contract, this price is going to be multiplied by 100 to give you the maximum cost of the order. So for example, again, you want to buy the $17 call for GameStop, which is expiring on December 11th, 2020. The option price is $2.09. When you multiply that by 100, you will be paying $209 for this particular option. Okay, so how do you actually make money from options? So after buying this call, if the price goes up, the difference between the actual price and the price you bought this option is actually your profit. Since you have one contract, which is equivalent to 100 shares, so every time this option increases by 1 cent, you make $1. And the same, if it decreases by 1 cent, you lose $1. So let's say, for example, this option goes up to $3.09. That is $1 difference. So you multiply that $1 difference by 100, which is equivalent to $100 profit. And the same, if it moves to $1.09, you just multiply that $1 difference by 100, which is $100. So that's how much you lose. Can you make money only when the stock price go up? And this is one amazing thing about options, and one of the way it is different from buying stocks. So let's say you buy one share of GameStop. If you want to make profit, the price only has to go up from where it was, and if it goes down, your money decreases in value. So with option, you can also make money with the stock price going down with something you call puts. Now I'm going to introduce you guys to puts. Since this is the call section, you're going to go ahead and click on the put section. So if you're expecting GameStop to go down below 1680, you can actually buy put to make money when the stock go down. So this is again what's great about option. So basically guys, puts are the opposites of call. If you think there's downsides to a stock, you buy puts, and if you think there's an upside to a stock, you buy calls. So every time the stock price decreases, you make profit in the puts, and every time the stock price increases, you make profit in a call. So basically almost the same concept applied for calls and puts, except that you're profiting when the stock goes down when you buy puts. For example guys, let's say you buy the $15 put. It means that you want the stock to fall below $16 and goes towards $15. If that is the case, you are actually making some profit from that option. For puts, in the money options are above the stock price. Anything above the stock price for puts is in the money, and anything below the stock price for puts is out of the money. So how to actually buy a contract? Since it is the same thing for put and call, the same steps, so I'm going ahead to do it for call. We're gonna buy one call. So to buy contracts, you can go ahead and just press on the strike price or the options you want to buy. So you press the plus sign. If you're on a computer again, you will see a little box to your right, and if you're on a phone, you will just see another window comes up. So here, since we're on a computer, we're gonna do it straight up. So you just press again, you just press on the call and the strike you want to buy, and from there it shows you your order. It tells you that you're buying a call. It tells you what call you're buying, the expiration date, what you're doing, the action that you're doing, which is buying. The option cost is $2.09, and the total cost will be $209. So after you select that, you continue. It asks you to put the amount of contracts you want to buy. Again, each contract is 100 share each. So let's say you want to buy one contract, and it shows you the limit price. So there's a price range between $2.08 and $2.10. The $2.08 is the bid price, and the $2.10 is the bid price is the maximum price a buyer is willing to pay to buy these options from you, and the ask price is the minimum a seller is willing to sell you this option. So once you press good for it, if the order isn't filled by the end of the day, which is 4 o'clock, the order will automatically be canceled. And for good till cancel, you have 90 days for this option to get filled. If not, it will get canceled. After you complete your order, you press review and then you submit it. So from there, you buy your option. It might take a little bit to be filled, or it might go right away. Sometimes it takes hours. It depends. So this is how you buy option calls. The same step basically applied for puts. You just select on the plus sign, then you fill out the order form the same way you did for the calls, and then you submit your order and then wait for it to get filled. So let's say you make profit and you want to sell this option. So once you make a profit, you can sell whenever you feel comfortable. So for example, I have 4 contracts. So let's say for example I make a profit in this contract and I want to sell it. So what do? I'll see the box with the drop down arrow that tells me buy or sell GameStop. So if I want to buy, I will press buy to open, and if I want to sell, I will press sell to close. So if I press sell to close, it's basically the same step as buying. The difference is that you are selling now. Basically, fill out this form the same way you fill out the form for buying. So basically same step, guys. So this is how you can sell your options. So how long does an option last? An option is, in contrast to a stock, it is not forever. You have an expiration date. So by this expiration date, if you don't sell your option, or if this option doesn't break even, your option will expire worthless, which means you will get nothing out of this trade. So for example, this option expires on January 15, 2021. I bought the $30 call. So if this stock for GameStop doesn't reach $30, that means if I let this option expire, I will get nothing out of this trade. It's simply just expired worthless. Another question I usually get: when do I sell my option? You can sell your options anytime you want, whenever you feel satisfied, whenever you feel comfortable with your profit. If you're losing and if you can't stand losing any more money from that trade, you can sell and cut losses. It's better to lose some of your money than all of it. You don't have to let your options expire if you're losing money, nor wait for expiration date to take profit. Whenever you are satisfied with what you make, you take your money and go with it. If the option did not reach the break even or the strike price, but I make profit, can I still take my profit? Guys, absolutely yes. I see people leave their option until Fridays on the expiration date. Even though they are making a profit, they still leave it. Do not do that. Sell your option and run with your profit. Thursdays and Fridays are usually sell-off days. So if you wait, you will most likely lose your profit or even all your trade. So please guys, sell and run with your profits. So quick recap: options allow you to buy 100 shares, which is equivalent to one contract of a stock at a strike price. You can make money with options when the stock go up, this is when you buy call, or when the stock go down, which is when you buy put. In the money options are usually less risky, and out of the money options are more risky. You sell for a profit whenever you feel comfortable. Don't wait for the expiration date. My opinion, take profit when you can. The goal is to grow your money and learn, not trying to be the next millionaire with one trade. I'm not saying it can't happen, but it rarely does. So build and learn. Anyway guys, so if you get to this point in the video, this means it was helpful and you learned something today. So thank you for watching. If there's anything that I didn't mention in this video, please feel free to comment in the comment section below. And if you just getting started with trading or investing and you don't have a broker, watch my previous videos. Also, you can go ahead in the description below, you will find the Robinhood link to download the app and start investing and get a free stock today. Otherwise guys, give this video a thumbs up and hit the subscribe button. Thank you very much for watching. Until next time, invest safe.